Hey everybody, Lawrence from Financial Thing. .com. Here. No. How is everybody doing on this fine Wednesday evening? Yes, you heard it right. It's Wednesday, a very unorthodox day, evening for the live stream, but we make every effort to accommodate the guests that I think are important for us to get on the live stream. So today is no different when we have upcoming in just a couple of minutes the CEO, founder of Loanpad, Louis, who is going to be coming on here and answering some questions. We haven't had him on in a while. I think it was November 2022. It was the last time. So, wow, time really flies. But I know it's an unorthodox time. It's 4 p.m. in the UK. Right now it's 11 a.m. here in Orlando, Florida. Very steamy, hot Orlando, Florida. But nevertheless, we will have Louis on here in a moment. If you have any questions, put them in the comments, and I'll get to them at the end. So let me go ahead and just bring Louis on. Let's wait no further. Hold on here. The marvels of technology. Here we go. I have the curtains pulled today because the sun is blasting through that window. But let's get Louis on here. Louis, you there? Hang on. Louis, can you turn your video on? There he is.
Should be on. Can you see me?
You know what? I do see you looking the same as the last time I saw you back in, well, I technically saw you in person a lot sooner than this, but last time I had you on the stream was in November of, I think, 2022. If I look back, it's been almost a year and a half. Wow, time flies, doesn't it?
It does indeed, yes.
How are you doing?
A bit grayer than I was then, but yes, I'm all good. How are you?
Yeah, doing really well. Thank you so much for coming on and doing this. It's a bit of an unorthodox time and day for us, so I don't know if the usual suspects will be here or not, but we have certainly a few people tuning in, so we may take some answers at the end, some questions from you if you have time. So let's
thank you for having me on your show.
Much absolutely. No, it's always an absolute pleasure. So let's talk about, of course, Loanpad. For anybody that doesn't know, UK-based peer-to-peer lending company. Now I use that word in quotes because it's changed a lot, the scenario of peer-to-peer lending now, but you're definitely in the finance business where you take money from investors and it gets loaned out through Loanpad's facilities to property-backed loans in the UK-based loans. So talk to me about, let's just talk about some statistics here. I kind of run through Loanpad's little data feed from time to time because I find it's really an interesting page that you are very unique and you offer this type of transparent information on a really easy to spot screen. So if anybody, by the way, doesn't know about this, if you go under your loan book in your Loanpad account, there's a live data feed tab and you can see all the information. So just talk to me a little bit about the loan book and how it's changed. Obviously, it's increased over the time. What is the current size of the loan book at the moment?
So we are currently at just over 94 million, heading towards 100 million, we hope. Hopefully not too long before we cross that milestone. It'll be a nice milestone to reach. We have around 230 loans in the portfolio at the moment. So very good diversification for investors. Obviously, investors are spread across all loans in the portfolio. So that means less than 0.5% of investors' money is invested in each loan on average. Obviously, some loans are bigger than average, some are smaller, but the average loan accounts for less than 0.5% of an investor's invested funds, which we think is superb, especially considering that each loan is also a maximum of 50% loan to value. So that is all very good. We have, I believe, one loan in default at the moment. We have no concerns over it. It's with receivers. It's a loan that involves two properties. Each property is worth around, I think both are under offer actually at just over 500k each. and our loan is around 500k. So we are very comfortable with that. We've had a few other loans that have gone into receivership over the last year or so, but all of those have now been resolved and repaid. Well, I say all of those, there's probably only about 2 or 3. So yeah, I mean, we don't rush to put loans into receivership. We're always very keen to work with the borrower to give them whatever time they need to resolve a situation. Obviously, being a 50% loan to value situation for us gives us a lot of comfort to sit back and give the time and help that the borrower needs. It's also helpful in the sense that our investors are spread across all loans, so there's no investors that are invested directly into an individual loan where they're keen to get their money back. It doesn't really affect investors that want to withdraw money. So from that perspective, it's very, very easy for us to work with the borrower. We're not under pressure in that sense. And yeah, so at the moment we have one loan in default and we don't really have any concerns about it. So things are ticking along very nicely. We've increased to 230 loans within the portfolio. Obviously, as the size of the portfolio grows, we expect that loan number to continue to increase. So essentially, investors will have less and less invested in each individual loan. Even if a loan were to somehow incur a loss, even a complete loss, we're talking a matter of days or weeks worth of interest for investors. So nothing too catastrophic, but we haven't had any losses to date. We're not anticipating any losses. All the loans are pretty healthy. As I say, there's one in default, but we're very comfortable with that one. So yeah, all is good.
Your loan book has grown as I've watched it over the years. The size of the lending partner loan portion, the total loan portion, but the average loan to value has always kind of hovered around that 42%, which was pretty impressive. Could you tell people maybe about one or two projects that you've helped fund, so people can kind of get an idea about what type of building is going on, what type of development work you are helping to fund through Loanpad and your lending partners?
So it's really a full spectrum, from straightforward bridging loans. When it comes to building, as you say, a lot of our borrowers are buying buildings to turn them into HMOs. So that's a house of multiple occupation. So the benefit of that is with an HMO, you generally get a much higher yield in terms of the rental income than you would on a normal house or flat. So that's quite a popular situation at the moment for a lot of our investors, for a lot of our borrowers. We also have several ground-up developments. One in particular is in central London. That's our largest loan on our books. Our loan is about 3.5 million, which is our largest loan. But the overall loan actually is more like 10 to 12 million. I'm not sure the exact amount currently. And the GDV of that is around, it's north of 20 million, somewhere between 20 and 26 million, depending on what metrics you're using. But we're essentially at about 15% of GDV on that loan, even though it's our largest loan. So that's a development of seven apartments in central London, so very high value, but something that we're very comfortable with. We have other loans where borrowers are turning houses into 3 or 4 flats, some where they're involving extensions as well as conversions. So really a broad spectrum. Ground up developments we're much more careful with. We only really do those with a handful of our lending partners, obviously because of the additional risks and monitoring requirements involved throughout the life of the loan. So yeah, we're happy to look at most. We don't have hard and fast rules about what we will and won't lend on. We pretty much look at any deal that's presented to us, although obviously we do have a preference, and because we're in a position where we can pretty much cherry pick the type of loans we want to do because we're working with so many lending partners. Obviously the simplest is straightforward residential bridging on flats and houses. But we appreciate we can't just stick to that type of lending. So we look at most things, but we steer clear of properties that we consider are not very liquid. So in the event of a default, they're going to be very difficult to shift. For example, a farm. We were approached to lend against a pig farm recently, which we decided not to do, simply because if the loan gets into trouble, it's a very difficult asset to necessarily sell. There's not a queue of buyers waiting to buy farms as there is waiting to buy flats and houses. So obviously that's a big consideration for us. But generally we'll look at the deal based on all the merits, including the strength of the borrower. Sometimes we have a loan where the asset doesn't seem to be grade A in our books, but we have a borrower with a net worth of tens of millions, so it gives us extra comfort in the event of the loan going bad or the asset not being completed. Then we obviously have the borrower's net worth to fall back on, so that's quite an important factor for us as well. So we tend to look at all the circumstances and take a view.
Sounds like you have a lot of loans that you're kind of rummaging through. If you have 18 lending partners, I definitely want to touch on that later on in the stream about this growing number of lending partners. People are always asking me about that, so we'll talk about that. Let's talk about interest rates for a second. So obviously the Bank of England has pretty much been remaining steadfast with their interest rates being a little bit higher than I think most people would like to see. And the gap between the savings account rate that you can get now in the FSCS protected savings account and Loanpad's classic account, the gap is not particularly high at the moment. It's not a big gap. Are people still willing to utilize that account with that small gap being present still? Are you finding people tending to use more of the higher interest rate account through Loanpad?
Well, it's always been the case that the premium account has always had the vast majority of funds. We're talking 90% plus of all funds are in premium or ISA premium accounts compared to the classic or ISA classic. So certainly that's still the case. Although the classic accounts are still very much used. One of the reasons the classic account is much lower is obviously we have a £20,000 limit on the classic and the ISA classic accounts. So that limits the amount of that investors can invest in those accounts, and that's for us to help us regulate liquidity. But yeah, I mean we still have plenty of investors using the classic accounts. Clearly the gap between our classic account and instant bank accounts, instant access bank accounts is much less than it was a year or two ago. I feel that margin will start to increase again as base rates go down as expected. But yeah, I mean there's still a lot of investors using that account, and also with the ISA account, the ISA instant access account rates seem to be cash ISA rates seem to be a bit lower than standard account rates. So there's also that, but I believe that margin will continue, will increase again over the next year to 18 months as base rates start to come down.
Do you see that when the Bank of England does start to reduce those rates, will you have to adjust that classic account rate to match that, or would you see it remaining where it is at the moment?
Well, we'll have to see when base rates change. We'll have to see how that impacts the market rates and what our competitors are doing in terms of the bridging lending side and development lending side. So we'll have to, obviously we want to keep rates as high as we can for investors, but we'll have to see. I mean, our rates aren't going to go in tandem with base rates. So if base rate goes down 0.5%, doesn't necessarily mean our rates are going to go down 0.5%. We'll have to see, and obviously any reductions we'll try and do gradually over a period of time. But I do feel that over the next 12 to 18 months, it's very likely rates will come down. Certainly base rates and probably on our platform too, but not necessarily to the same degree.
Yeah, for us old school loan padders who've kind of been with you from the beginning, we remember when those rates were 3 3% on the classic account, so things have definitely changed.
Yeah. Well, I mean, those were in the days where base rate was like 0.1% or something, right? The good old days. And savings accounts rates were a little more than that, right? So
Yeah, absolutely.
I don't think. I mean, I don't think it's likely that we're going to get back to there anytime soon. But you never know.
Not with these inflation. Didn't the IMF just put out a statement saying inflation was going to continue to be a problem? I saw yesterday, which I've kind of been saying all along. But
yeah. Well, inflation seems to have come down quite a lot, actually. I think the latest figures in the UK were around 2% or thereabouts.
So they claim.
So they claim, yeah. Well, I guess it depends how you measure it, right?
So they as Ali G used to say. So they claim. Let's talk about and somebody asked this question, and I think this kind of goes along with this. Mr. Helium's. Phil Higgum. Welcome, Phil. He said, why is Loanpad doing so well when other major peer-to-peer companies such as Assets Capital and Funding Circle have closed their door to retail investors now? And I think this kind of goes along with what I was going to ask you about distressed loans, that you've had pretty low distressed loans. It's not really been an issue with Loanpad as it has with other peer-to-peer lending companies, and I think that's one of the reasons you've done well in this space. But can you talk about the loans that have run into distress, and how do you handle when you have a problematic situation? How long do you wait before taking action, and how do you handle those distressed loans?
Well, I mean, we look at everything on a case-by-case basis. We had one loan that was recently in auction, probably about 4 or 5 months ago or thereabouts, where it was an old pub with residential units. The borrower was intending to convert it into, I think it was a 17-room HMO. Unfortunately, the borrower started the works, then stalled and delayed, and unfortunately, it was due to personal difficulties. The borrower was going through a very messy divorce, unfortunately, so their mind was elsewhere. They lost focus on the project. We gave them as much time as we could. Us and our lending partner were both very happy to give them the time they needed to get back onto the project. And they did get back onto the project, but then very shortly after they fell off it again due to the personal circumstances. So eventually we had no choice but to appoint a receiver essentially and try to recover the loan by selling the asset, which is what we did. It wasn't such a straightforward situation. It's probably the closest we've come to a loss. We were still very far away from a loss, as it turned out, but we were owed about 560,000, together with rolled up interest and receivers fees and legal fees and auction fees and so on and so forth. We needed to get about 600 at auction to recover our debt, let alone net of fees, let alone what the lending partner was owed, sorry. So it was sold at auction for, I believe, around 680. So it was relatively close. We were still more than 10% below that sale price, but that's probably the closest we've come. And that involved a myriad of issues. One of those issues was this was a loan that started pre-interest rate rises, and the GDV and the valuation was based on the yield. So, yield at the beginning of 2022, before interest rates had gone up, was generally much lower than it is today. Obviously, with rates having gone up 5% in that interim period, the yield you would be able to sell an HMO at would be you'd need to sell it at a significantly higher yield to attract a buyer than you could have done in early 2022. So the valuation was out of sync due to the time frame, due to what happened with interest rates, and due to the length of the project. We were never in a panic in terms of, we never expected to have a loss, but it was cut quite close to the bone when all is said and done at the end of it, and it involved our lending partner taking a loss, or at least an interim loss until they recover the funds elsewhere from the borrower. But yeah, that's probably the closest we've come to a loss. But due to our lending structure of 50% loan to value, does give us a huge buffer in situations like that, and obviously that proved to be key in this particular loan. But we don't have any other loans on the books where there's one in default, as I say, which is with receivers, but we're expecting the sale proceeds to be at least double what we're owed, so that there's no concern on that side. All the other loans seem to be ticking along very nicely. Obviously, there's plenty of extensions. We often get asked what extended no ICF means, but really that just means that the loan's been extended and the borrower is continuing to service the loan, so the ICF is not needed. So the loan is still in good standing. We're very happy to extend loans due to the situation that we're in at a very low loan to value. And provided that lending partner is happy, we're typically happy to extend loans as long as the borrower is upfront, the borrower is continuing to service the loan. We don't see any reason to demand repayment at a given time. So that's one of the benefits, from a borrower's perspective of working with Loanpad, is we're very patient and very much on the borrower's side as well. We have to be helpful to borrowers because at the end of the day, every loan is essentially a business partnership between a lender and a borrower, isn't it? So we help where we can, but obviously not where it puts our investors in any risk whatsoever. So
let's talk about liquidity. So one of the big selling points of Loanpad has always been the liquidity that I think ever since day one in 2019, your estimated time to be able to exit from to sell and get your money out of the classic account, which, by the way, people, is never guaranteed. This is not a savings account, but you've had this really good liquidity since day one. Less than 1 day, it says on the data feed about how you can get your money out of the classic account if you needed to do that. I don't think a lot of people do, but it's there right now. How have you been able to maintain that type of liquidity where other companies have struggled so much in that department?
So I guess it's a combination of factors. Firstly, we limit the classic account to 20,000, so that limits the amount that people can withdraw instantly, essentially. The other account is 60 days, so we have a 60-day window, essentially. We can see the queue coming 60 days in advance. A lot of those transfers get cancelled anyway, but we can see what withdrawals have been set up 60 days in advance. So we can see tomorrow what's expected in the queue, and the day after, and the day after, and so on. And during any 60-day period, typically we'll get roughly 10%, maybe even 15% of our portfolio repaid within that time. That's the benefit. One of the benefits of having 230 loans, as opposed to, let's say, if we had 10 giant loans, it would be a very different situation because the liquidity would be all over the place in that situation. But because we have so many loans, it's a very stable level of repayments that we pretty much get each week and each month. So we can pretty much be reliant that we're going to get X amount repaid over a certain period of time. We also hold cash in the cash buffer at all times. And we can also call on liquidity from some liquidity providers in the worst case scenario. So yeah, 5 years in or whatever it is now, and we've managed to always keep that up. Don't see any issues with it moving forward. But again, as you say, it's not a guarantee. We can't stop 3,000 investors logging into their account right now and withdrawing all their money in the classic account for tomorrow, which would cause a problem. But it'd probably be a short-lived problem. It would probably take us 2 or 3 days to resolve that in the worst case scenario. But
yeah,
we're quite comfortable with that position. I can't say what's happened elsewhere with other companies, but I think obviously it's important when you're offering liquidity that you do have certain measures in place to be able to control liquidity.
It's definitely been a problem, but not. Hopefully, it's not one that we're going to see too much in the future now with other companies. But Loanpad has been doing a really good job in that department. Let's talk about these lending partners. Every time I log in, it seems like there's another one being added, another one being added. I remember when it was 12, I think about, I don't know, maybe a year ago, and now you're up to 18. How can you tell us a little bit about the new lending partners that have come on board? What they're
Yeah,
up to?
I mean, we've had a few join in the last few months. We've also got a few more that want to join. The ones that have joined recently, really, it's just to tee them up so that when things pick up in terms of the funding, we'll be able to hit the ground running with them. So out of our 18 lending partners, we probably have half a dozen of those that are very, very active, half a dozen that are semi-active, and half a dozen that are not inactive, but not very voluminous. So most of our focus is on only a certain number of those partners currently. But as the funding picks up, as we hope it will do, once interest rates come down and our margin starts to increase again, I believe the growth will pick up. So that's one of the reasons we're trying to put relationships in place with a number of lending partners so that we are able to deploy whatever capital comes onto the platform quite speedily.
Mm-hmm. When we first started meeting each other back in 2019, Hanf was kind of the main one you were working with. I remember meeting, I don't remember his name, but the owner.
Ken Court, yes.
There you go, Ken. Yeah, Ken and Louis and I were able to meet up, and I was able to talk to him and kind of find out what they're doing, which was really super informative. That's very unusual to be able to get access to one of the main lenders and sort of ask them questions. And I was really impressed by what him and his family are doing over there. Is now you said about half a dozen lenders are the most active. Is Hanf still one of the main lenders for you with the activity department?
Yeah, I would include Hanf in one of the more active lenders, although most of that action, let's say, is not. I mean, they're not as active as they have been historically. Just generally because I think they're currently going through a succession process where Ken's son Ben is actually in the process of taking over the reins and managing most of the business moving forward. So that's slowed down a little bit, but I'm sure that will pick up again once Ben's got his feet under the table. And yeah, so.
Mm-hmm. I very much enjoyed that meeting. It's probably one of my highlights of being in the financial thing circle and having access to things like that. It was super cool. Talk about Loanpad as
a few years ago, yeah.
Yeah, it was a few years ago. It was near London Bridge, right? Am I thinking that correctly?
Yeah, that's his London office. That's right. Yeah.
See, still the brain still works. Okay.
Tower Bridge.
Tower Bridge. Okay, I get them confused. But,
me too.
Loanpad as a business, how are you guys doing as a business within your profitability and operations? Are you still the same size team? Have you grown or shrunk? Or because you've always kept things in a manageable position. You never wanted the expensive London office downtown. You've always kept things very reasonable. I remember last time I came to visit, you got a new kind of office, but it was still very manageable and nice. How are you doing on the business operations end?
Not much has changed. We probably, I don't remember what the size of the team was necessarily when we last spoke or last met, but we're a team of 13. We are probably going to be taking on a fourth software developer in the next couple of months, so that'll make it 14. But then on top of that 14, we have all our lending partners who, although they're not part of Loanpad and they don't work for Loanpad, but they are working on each of the underlying loans. So, you know, that's a massive resource essentially, handling all the loans. Each lending partner has their own staff, obviously. So a lot of the background, initial due diligence, in fact, all of the initial due diligence, the instructions to the surveyors and the lawyers and so on and so forth, and all the negotiations with the borrowers and the documentation is all handled by lending partners, which means that our work is far reduced to what it would be if we were doing direct loans. Also, our software is fully automated and very simple to use, so we don't get a huge amount of customer or investor queries. So yeah, it's we're pretty lean and mean, I would say, in that sense. From a business perspective, We are still profitable. We've been profitable all the way through the last 3 years or so since we became profitable, I think mid 2021. And because our cost base doesn't really go up unless we take on more staff, that should continue being the case for the foreseeable future, really. And as the portfolio grows, the profitability should increase. So
that's good.
We are doing very well on that front. We're not looking to raise any more funds. In fact, we may be able to distribute funds to shareholders within the next year or so, in the form of dividends potentially. So that will be something to look forward to.
Yeah, you never did you ever do a fundraise on one of those equity raising websites? I
Yes,
don't remember.
We did on Seeders actually in 2021, I believe. Was it 2022? I can't remember. I think 2021. We raised a few $100,000 on Seeders. I think 400,000 or thereabouts. So it'll be nice to be able to reward those investors with a dividend, as it will with all other shareholders. So,
that's pretty cool.
I'm not sure how many companies on Seeders and the equity crowdfunding websites have paid dividends, but
probably not many.
Yeah, I would imagine it's not many, if any. So it'll be very nice to be able to do that. Hopefully next year, middle of next year at some point, we anticipate being able to do that.
Let's talk about interest rates. 2024. People were expecting some more cuts, but so far we are now July, halfway through the year. Haven't seen much really going on. What do you think? Make a prediction for the rates this year.
I think they'll start to edge down, possibly even at the next meeting. I think there's a meeting in August, beginning of August. I don't think there's anything drastic. I think if there are any cuts, it'll be 0.25% at a time. I think we might see 2 or 3 of those this year. Then again, we might not. So
you have to look. You have to look at the crystal ball, Louis. Do you have one of these?
No, I don't. I don't. Does it work?
Absolutely. Of course.
You should be telling us what's going to happen.
I could tell you the latest stock that's going to go viral. Everything. It's a good thing.
What's the name of that stock?
Oh, GitLab. GitLab, maybe. Who knows? Apparently about to be acquired possibly by Google, so we'll see. But hey, not financial advice. But I did add it to the Trading 212 portfolio this morning. A day late. I was supposed to do it a couple of days ago, and then the news came out they were possibly going to be acquired. I'm like, darn it. Anyway.
I see Bitcoin's been flying, which is one of your favorites, isn't it, if I recall?
Well, I may or may not own Bitcoin. You can't say that you do nowadays because people, they're getting robbed and kidnapped and things.
Really?
It's pretty crazy out there. But I may or may not own some Bitcoin, yes. But it is one of my favorite inflationary combative financial products, which is its volatile nature, which I love. But yes.
It seems to be at all-time highs or close to all-time highs. So
it's about 20% off.
Is it?
Yeah, it was. It hit 74,000 US and then pulled all the way back to 55. So it had quite a pullback, and I said, this is a good buying opportunity. And most people thought, it's going to go back to 35, which of course it didn't. Now it's back up to 66, 65. But doing what Bitcoin does. What's your biggest challenge in 2024, Louis? Loanpad, and what's Loanpad's biggest challenge?
I would have to say getting our new software over the line. It's been a couple of years going now, but we are in late stage testing, so we're still ironing out various sorts of bugs. We've got some of the team internally and externally testing, so we're still ironing out quite a few bugs here and there. But it's coming along very nicely, so I'm still hopeful that at some point this year we'll be able to put it live and then start building new features for investors, potentially new accounts, and so on. So that would also include obviously the reinvestment of a penny.
The big one that everybody's waiting for.
Yes, I think so. Yeah.
The penny investment.
It's good not to have any dormant cash, right? And it would increase it will increase the compounding rates. So
Yeah,
it'd be nice to get that done.
I think I might have to send Loanpad some more cash this month. I don't know. I've been contemplating sending some more money, and I think that maybe my extra £500 will push the penny development over the edge. Maybe.
Maybe.
We'll see.
Maybe.
So the peer-to-peer lending sector, we've not really seen much happen as far as new companies entering the sector at all. It just seems to be the old crew of companies, the ones that I think are doing well now, seem to have a solid footing. Some of the problems that we've had in the past have kind of disappeared for now, hopefully. What do you think about the current peer-to-peer lending space and the sector in general?
I mean, it does seem to be quite quiet. As you say, I don't think there's been many new entrants, if any at all, in the last year or two. I mean, to me, P2P is just a label. Essentially, we're a property finance platform where retail investors of any size or experience can really invest their money into bridging loans. I'm not sure how many other P2P companies are still in operation. I know obviously a lot have closed for one reason or another, or in the process of closing. But we have full intentions to continue doing what we're doing. As I say, we're about to get to 100 million hopefully before too long, and for us that's just the start. We want to see this grow to several hundreds of millions, and that's what we're fully focused on. Our business model has always been based on retail investors. That's what we believe has long-term value. Rather than having 2 or 3 big institutional investors, we would much rather have 10, 20,000 retail investors for a number of reasons. But that is our philosophy. That's not to say we won't use institutional money as another source of funding, but currently there's plenty of availability of institutional funding, but it's very expensive as well, considering interest rates are at 5.25%. And for our specific model, it's not quite workable. But I think as rates go down again, that will become a viable opportunity as well. But it would only ever be used to support what we're currently doing as opposed to replacing it.
Mm-hmm. Yeah. What about the new government? You got a new government in the UK, the Labour Party is in. How do you think that's going to affect home building for the future, which has been a real problem in the UK? There's just not enough affordable houses. Do you think that the Labour government is going to fix this problem?
I can't say I know too much about Labour's specific housing plans, but obviously I think it's clear to everyone that there's a shortage of housing, and there needs to be a lot of effort put in there to increase the level of house building, and that's really what we do. We fund small developers, which banks aren't interested in. Banks are typically only interested in very large scale developments with very large house builders. So what we and all the other bridging lenders around the country are doing are helping the smaller developers get access to that finance to continue building. And I feel that demand is pretty much insatiable. I think it'll continue that way for a considerable period of time. I'm not too sure what Labour are or aren't going to do in that sense, but I hope they come up with some good policies that address the lack of supply rather than just increasing demand continuously with various policies.
Yeah, I think government narratives always seems to be a lot of talk to get elected, but when it comes down to actually implementing and making very strong changes, it just tends to disappear in the wind. So we'll see if this one's any different.
Yeah, well, we'll see how Labour gets on. I can't say I voted for Labour, but now that they're in power, I think we all need to wish them the best, essentially, and try and make sure that they're working to everyone's benefit, essentially. So
it's not a job that I think I'd ever want to apply for. The job as a government minister in the UK, it just Doesn't seem like a fun thing. Always under scrutiny and very underpaid.
Hiding to nothing. Yes.
Yeah, exactly. Let's go ahead and just ask a couple of questions from people that are watching the stream. Thank you to everybody who's tuning in to it for a rather early hour on a Wednesday. Everybody is here. So let's see what we got for you, Louis. They won't be too bad, I promise. There's nothing vilifying you in here that I can see. Here's a question from Dave Dawson. I have no idea where he is. Somewhere in the UK. Is Louis? Am I saying it right? Louis, right? Louis.
Yes.
Louis.
Yes.
I have a best friend whose name is spelt the same as you, but he pronounces it Lewis. So I don't want to butcher your name, but it's Louis.
Lewis is usually Lewis, but then again, I guess it could also be Louis.
Or Luis.
All that, yes, yeah, that's
Luis. True. Anyway,
Luis, yeah.
Dave was asking, is Louis finding plenty of money coming in to keep up with the loans? I'm presuming he means from our side, the retail people. How do you balance loaned and borrow money?
Well, that is the perennial, the ongoing struggle really for us is balancing, supply and demand essentially. So, it's always the case with either got too many deals or too much cash in the cash buffer. So it's usually the latter. It's usually the former. It's usually that we have too many deals. For example, right now we're just inundated with deals that we simply have to turn away because of lack of funding. So it's in one sense it's a good position to be in, but we need to obviously make sure we don't let lending partners down. So it's not the easiest thing, but because we don't commit to lending partners, we don't stick our neck out in that sense. We add loans to our pipeline, and as the funding's available, we provide the funding. But a lot of our lending partners pre-fund the loans, so they're sitting on their books already, waiting for us to buy in our portion. At which point they then sell our piece to us and use the funds for their next loans essentially. So that's very helpful for us that our lending partners can often complete the loan with their own funds in advance. So it takes the pressure away of having to have the money available on a particular day essentially.
Yeah. So you're doing your best, I think, which is the answer that most peer-to-peer companies do, is they just have to roll with it and try to do their best with the balance, because you never know how much money you're going to need. It's
one of the reasons we would be considering institutional funding as well, as to be able to plug that gap essentially, so we can call on those funds in the event there aren't retail funds available.
Absolutely. Let's see here. We touched upon Mr. Heliums. Hello, Mr. Heliums. Good name. He touched upon the aforementioned marketing and software changes. We talked about the website upgrade, that it is in development, and these things are very tricky. I don't know if people quite understand how difficult it is to change software and make big upgrades, but I know it's quite difficult. So you are
we've built our entire platform from scratch with a much better system, which is much more flexible, and gives us much more flexibility to change things and add new accounts and add new features and so on. So whilst it's taken a long time, our current software is working perfectly well. It just doesn't allow us so easily to do the things we want to do moving forward. So hence the changes.
So you made the changes.
From an investor's perspective, I mean, it will look almost the same at the start, although there'll be better live data fields and various other features, but the additions will come over time as opposed to all be there on day one.
Okay. Stephen Hale touched upon the Bank of Interest rates dropping. We talked about that and how interest rate changes would affect Loanpad's rates or maybe not affect it. Depends on kind of demand and supply in the market and what your competitors are doing, because you have to remain competitive. So I think we already talked about that. Mr. Helium's asking a nerdy question. Are the number of total lenders listed on the website separate individuals, or are those with ISAs and standard accounts counted as two investors? So that would be on the retail lending side, people that have accounts.
No, if an investor has a standard account and an ISA account, and a classic ISA and so on and so forth, it's just counted as one investor.
Okay.
But if that investor opens a company account, then that's a second investor.
Okay. There you go. You heard it right here first. Paddy Gilfillan, who I believe is located in France, bonjour. He said, is it possible to increase the 20,000 limit on the classic account? I think you already touched on that, saying the reason it's that amount is not to create too much of a liquidity crunch if it happens.
We do get asked that quite a lot, actually. For now, we're not changing that, but it may be something that we increase in the future. It's not going to be massively increased. It might be to 25 or 30 or so, possibly 40. But obviously, the reason there is a restriction on that amount is to regulate liquidity. And I think that's to everyone's benefit, really. Even though it'd be nice to be able to invest a larger amount on instant access, we have to obviously primarily ensure liquidity for everyone. So.
That makes a lot of sense. Sometimes you need safety. You don't want Iceland happening where there was a big run on the banks and then everything went to poo.
Yeah, exactly.
Patty also asked, Patty's got a lot of questions tonight, so there we go. Who makes the loan to value assessment of these RICS chartered surveyors? So he's saying he's asking
the valuations.
Well, he's asking about the loan to value assessments. Are they made by chartered surveyors? So,
well, the chartered surveyors are the ones that give us a valuation report. So they'll give us a valuation typically in different situations. They'll give us an open market valuation. They'll give us a 90-day or 180-day valuation. They'll give us a rental valuation. They'll give us a valuation with vacant possession. They'll give us a valuation with an existing tenant if it is tenanted. And they'll also give us a gross development value if there's a development angle to it. So we get a full range of valuations. When it comes to calculating loan to value, we use the present day value essentially. So if the valuation today, for example, if it's a plot of land and it's worth £1 million, but the GDV is worth, let's say, £3 million, then we will use on day one the £1 million valuation, and then we will steadily increase that over time until it gets to the GDV as more works are done. And each time we release new money for an extra drawdown, we get either an updated valuation or we get a monitoring surveyor QS report, which tells us the works that have been done, the value of those works that have been done, and the value of the works outstanding. So we use that to essentially have an interim PMV, which we call present market value. So on day one, it might be £1 million, but after a month it may be 1.1 million, 1.2, and so on until it gets eventually to a completed project, at which point we put it onto the full GDV. So it means that at any point during the project we would be capped at 50% maximum of the current day value.
Okay, thank you for explaining that. It's good to know how that works. Stephen Hale has asked that you mentioned new features, new accounts on the website. Could you give a little any type of information about what kind of new things people might expect to see? Or is it too early?
Well, I mean, one of the things is really around more administrative stuff. For example, if an investor has several different accounts, it may be that they have an account in their own name, they have an account in company A, account in company B, they may have an account in their wife's name. So an individual will be able to have permissions to access the whole range of accounts with essentially one login. So it'll be much simpler for that kind of thing. There's the 1P thing that we just mentioned, which will also be from day one. Moving forward, there'll be all sorts of new stuff, potentially new accounts, but again, I can't speak too much about that because nothing's actually been formally decided in that sense. And yeah, we'll have to. We will update investors closer to the time when it's ready to launch and set out all the new things that will be there.
Perfect.
But
Excellent.
It's hard to roll them off right now.
You'll get there. I know you'll get there. I know you'll get it over the finish line. For anybody that hasn't hit that thumbs up for Louis and Loanpad and for the stream, please do so. It's really great to have you here. We're going to wrap it up. I know you've got three young kids you've got to attend to, and that's not an easy job. So thank you for your time for coming. Is there anything else you wanted to mention before we go? Maybe we didn't touch on.
Not particularly. Just that we are very focused on continuing to do what we do. Obviously, it takes a long time to build a reputation, and it can be trashed in 5 minutes. So we are not complacent. We're very focused on ensuring our records of no losses, our record of full liquidity as advertised, and we look forward to going past 100 million, hopefully this year. And we're always available. If anyone's got any questions, just drop a line to support@loanpad.com, and one of our team will be very happy to get back to you as quickly as we can, usually within a few hours.
So there you have it, loanpad.com. Go check them out. If you don't have an account with them, go sign up, go poke around their website and their user interface. It's very easy to use, very simple. 2 products right now to choose from: Classic and a 90-day account, 60-day account with 2 different interest rates. I've definitely enjoyed watching you grow and the journey that you've been on right from the very beginnings. I think you're doing a great job. So yeah, keep it up, and hope to have you back on within a lot quicker than a year and a half. See how you're doing. So a lot of people saying nice things about Loanpad, by the way, in the chat.
Thank you so much.
You guys are doing a good job, so I appreciate you. Thanks for your time.
Thanks for having me on, Lawrence. All the best, and look forward to the next time.
Okay. All right. Cheers. Thank you, Luke. Bye-bye.
Bye.
So there you have it, Loanpad in full effect. Look, you're not going to get this information anywhere else on the interwebs. These guys coming here live and answering your questions. So thank you for your support, and thank you for showing up. I know it's a weird time. Sometimes I have to make adjustments. Like last week, I had a lot of personal stuff going on. I wasn't able to come. I was getting a little bit too stressed out. Doing this stream is not easy. It's definitely a lot of organizing. I'm not complaining, but it's not easy. And I just needed a week off last week to kind of handle personal stuff. But we'll be back next Thursday as per usual, barring any changes or whatnot. So hope you guys have a great weekend. Enjoy the Wimbledon peer-to-peer. Enjoy your weekend. Enjoy the weather. Hopefully it gets a little bit better. I know it's been absolutely not very good in the UK, but enjoy your weekend. We'll see you next Thursday. Harley is having a snooze. She'll be back next Thursday too, all being well. Have a great weekend, everybody. We'll see you next time. Take care. Bye-bye.